Good morning. It's Tuesday, November 19th, about 6 a.m. Central Time. Sorry, I'm sick as a dog here. So giving you guys a video though. We are wrapping up our 2025 precious metals outlook. It's right here. It's going to have our top 5 trading ideas going out to 2025. So send an email with your contact details to info@bluelinefutures.com and for a copy, and we'll send it out to you here. It's expected to be released sometime over the weekend. So looking at the overnight precious metals, they're higher. And remember, on Thursday, November 14th, that was the washout. We saw the consolidation on Friday. We saw the breakout on Monday. So we identified that type of technical chart pattern on Friday's video. If you didn't see that, go back and review it. I mentioned it in the first minute or two, so it'll show you what we were looking at here as far as a chart pattern. Now, overnight news, and this is kind of important, we've got geopolitical risks. So Ukrainian forces reportedly carried out their first strike on a border region using Western supplied missiles. So President Vladimir Putin, he approved the updated nuclear doctrine, expanding the conditions for using atomic weapons. So this is a definite escalation of what's going on over there. And you can see it broad-based in many of the commodity markets. So you get into the equity markets, they're slumping here at the moment, especially the European equities. They're shedding about 1%. You're seeing global bonds, they're climbing. So with this latest escalation, the S&P 500 futures down about 0.4 of a basis point. You look at the 10-year treasury yields, that's coming off about 5 basis points right now. And then you start to look over in Europe, you'll see European, German bond yields, those are both dropping. You also look at the euro, it's retreating, British pounds retreating, and then also Poland stock index down about 2.5%. They're a border town, so they'll be mostly impacted there. So you start to look at where the traditional safe haven assets are. You go to gold, you go to silver, you go to the yen, you go to the Swiss franc, those are all up, as well as the dollar index. So you go to the commodities price action here, you look at gold, it's continuing to rally here. It's up $22 at $26.37. That's up just under 1%, near the high of the overnight session. So we're closing back in, excuse me, on $26.50. That's going to be a resistance point. But when you start to get geopolitics, you get emotionally charged markets, they tend to overshoot one way or the other. What I don't like is the dollar index is up, and then also you've got gold up right now. Remember, they have periods where they work together. They work on safe haven type of asset plays. We've seen that before. We've seen that coming into the election. We've seen that many times during different escalations, especially in the Middle East and things like that. What I don't want to see is that the dollar continues to hold firm. These foreign currencies sell off, and then this escalation dies down over here. Like they go, hey, that was it on the one missile we shot. We just wanted to prove that, flex our muscles and prove that it worked or whatever. You'll see gold futures retreat on that. So I'm going to get a little bit more defensive. Probably not exit positions with clients, but either ratchet up some stops or buy some put options on that market, or buy put options on other markets here that are correlated somewhat with the metals, because I like the technical chart pattern. I like the picture going forward. I like the 2025 outlook, but I don't want to just get flushed out of the market here. So I need staying power, and that's just me giving you an inside look on how I think on this. Now, silver futures up 19 cents. They're not a lot higher here because of the fact you got copper futures down about 0.5% at 409. A lot of concerns about China, things like that. We've talked about that story forever. There's a lot of recommendations that if the tariffs go into effect, you're probably going to see a divergence between gold and versus copper. So we're seeing a lot of people on any kind of rally put shorts on in the copper market, or put some protective puts on in that market here, and are delta net short on the copper market. So you look at oil, you would think that oil would be higher on that type of news overseas, but reality is that Europe's largest oil field is now restarted after a power outage. So oil is still lower on the year. A lot of concerns about Chinese demand, and also the supply outlook into 2025 shows a surplus. So OPEC's supposed to increase their production about 500,000 barrels per day, and then the global supply production surplus should be around 1 million to 1.5 million per day. So that's slightly problematic for the crude oil market. The way people are looking at it is they're avoiding the front month on crude oil. They're going out to about March to June, and they're looking at buying that particular contract, because the farther you go out, the cheaper it is. They think that it'll take a lot of time in order for the newly elected President Trump to get some of this different things into place where we're going to see oil production ramp up in the U.S. So they're looking at going farther out to Q2, and that's the oil that they're tacking to the upside because of the dip there, and they get the benefit of the roll. The benefit of the roll is the farther you go out, the cheaper oil is here. So Bitcoin futures continue to be range bound, about 87.5 on the downside, 93.5 on the upside. And then back to the Russia-Ukraine thing, something to look at is wheat futures sitting at about a 1 week high, climbing for the third straight day. Obviously concerns about Russia-Ukraine and worries about a potential supply disruption here. So investors, what they're going to be watching today, and if you look at the economic data, it's kind of a good thing we don't have a lot of economic data coming out. We got building permits, housing starts, which are nothing. G20 meeting, which is not really anything, and then we got one Fed speaker. Now, we have a lot of Fed speakers coming out ahead of next month's rate decision. Several of those Fed speakers here have signaled the openness to continue to cut rates, especially if we start to see inflation easing. So it's nice to see oil futures come off a bit here, and a lot of these grains are trading at lower levels. Some of the meats and things like that have been rolling over like lean hogs. So you could see the inflation inputs come down just a bit here, and we can continue to get those cuts, and that should act as a tailwind to the gold market. Now, looking at some of the chart patterns here, obviously 2600 key psychological level on the gold market. Don't want to see it break that. Breaks that, chances are it's probably going to roll back over and retest those previous lows. Upside resistance. Now, this would grab some headlines. I'm not a moving average person. I use fractal geometry. I have a model that I've created over 20 years with Excel that plugs into CQG that tells you price volume volatility type model. But if you look at the 50-day moving average, we could recapture that on the gold market, 2664. So we got to get through 2650, 2664, 2667, somewhere in that region. It's going to be your next resistance level. We break above that, 2700. 2723 takes that back to a neutral trend, and then we can start attacking higher levels here. So I'm not bearish on gold whatsoever. I think that we're going to start to do it. We're going to start to move back up here, but I just want to be defensive in case we go back into a consolidation pattern. Now, the silver market, again, it's caught between copper, it's caught between the gold market. We saw a period yesterday where gold futures had gone up dramatically, about $45. Copper futures found their footing, went up about 5-6 cents, and then what happened? Silver futures were up 80 cents. That's what I told you I thought should have happened on Friday, but it wasn't because of the fact we saw global equities selling off dramatically. Now, you want to always look, if you're trading silver, you always want to have a checklist of things you go through. Like, you look at the price of gold, okay? Don't look at the price of silver first. You look at the price of gold, you look at the price of copper, and then have a piece of paper and go, well, I think that silver's going to do this, and test your knowledge on that market, because I'm telling you, they're so closely correlated, you wouldn't believe it. Now, you look at the copper market, the problem is that chart pattern, it's gone down, it's had a green shoot, it tested $4, so $4 psychological level. If you see copper futures break $4, chances are silver futures are really going to struggle or go negative. I'm not saying that it's going to happen today. I'm just saying that's a line in the sand for the copper market that you want to pay attention to. So that's all I got for you. I'm losing my voice over here. So got any questions, give me a call, 312-858-7303. Send an email to info@bluelinefutures.com. We'll send you out that report here. And again, you got any questions, give me a call. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.